So there's a lot that is happening in markets. We're still trading markets. We're still trying to make money here and there. And sometimes you lose money here and there again. But all in all, quite profitable from everyone on the team. I'm sure last week Caleb did for you some good breakdowns on markets. Lavi also shared some outlooks on fundamentals. Now it's my turn to take you through some of these things that you're looking at. And hopefully you learn something. So one or two things. So it's exactly 8 or 7. As a man who keeps his word, I'll start precisely at this time. So again, welcome for everyone who's here. For those who are new, my name's Kenneth Munene. I'm part of the founders of Financial Hub. And we basically focus on sharing with people commentaries on market, content around Forex trading and global markets. We're more focused on what is happening in America than what is happening in Africa, because that's the nature of our job. However, we try and keep up with also what's happening locally, but I'm sure we are better equipped to share with you what's happening across the globe. So market-wise, there's a lot that is going on from a fundamental perspective. Again, in the group, I'm not so sure about the different stages that you guys are in. Some people I know have attended our courses, so they're quite developed, or they're quite vast, at least in the knowledge they have around markets. I'm not sure if someone is new. If you're new, probably what I'll say to them might be a little bit confusing, but you can also piece one or two things together, or at least you could have something that will guide you in your research. In case you can't hear me, you'll just post in the chat room. But I think so far everyone can hear me. So you can already see my screen, but I won't go first into the technicals. The technicals will come in second or last. First, I want to go through what is happening from a fundamentals perspective. And what I'll do is I'll open something called trading economics, which is where I personally try and look at what is happening from a fundamental perspective. So we have three main problems currently that are running the US economy, or that the policymakers in the US are thinking about. Inflation is at 6% in the United States. So if you just come here, you can see that inflation is still at 6%. This inflation was obviously brought about by the cycle that started with COVID-19. It topped at around 9.1% sometime last year, and it's been declining ever since. However, 6% is still a lot. For anyone who's trading markets, you know the median inflation should be at around 2%. 2% is the target of inflation we're looking for. We are still 4% away from where we should be trading. So this inflation needs to come back down precisely all the way to around 2. And policymakers, that's what they are really trying to do. However, in their quest to try and bring back this inflation to 2%, they've been forced to do something called quantitative tightening or hiking rates. Hiking rates simply means you're trying to take as much money out of the economy as possible by making rates higher. You're trying to make debt expensive. And you can see ever since last year in May, rates have been moving higher. And rates are currently at 4.75. So it's normally a range. So you can see the last time they had a meeting, they raised by 25 basis points to 4.5 to the 4.75% rate in its February meeting, which was last month. Now this month, tomorrow, they'll come back again, and markets are already pricing in a 5% rate hike. What that basically means is we'll move from again 4.7 now, and we'll move from 4.7 to 5%. We'll have again a hike of about 25 basis points. However, as they are hiking these rates now, markets have started pricing in again a pause and probably even a return to lower rates. Why? The collapse of some of the banks that you guys have been seeing. I'm sure you have seen nowadays, because of the meme era, even things that are quite serious, quite influential, they tend to trend in the form of memes. So if you are keen enough to examine some of these collapses, I'm sure you saw the Silicon Valley Bank collapse. So let me just look for that Silicon Valley Bank. So this is the bank that collapsed. It had over 200 billion, 40 years in business, and there was a collapse. The reason for the collapse was obviously tight money conditions. If you are buying long-term bonds at 0% interest rates, and now bonds are trading at 5%, no one wants the bonds that you bought at 0% rates. So you're basically making a lot of losses. And this is one of the first bank to show significant losses. It ended up being acquired for very little actually, and it was some of their wings that were acquired. For example, the one in the UK was acquired. And now we have another bank bringing in a problem called Credit Suisse, a very, very big bank. It's been having problems again. It was also acquired by UBS. We've seen another bank, First Bank Republic, being bailed out. And we've even seen the Secretary for Treasury, she's called Janet Yellen, pointing out clearly that they will do whatever it takes to make sure that these banks don't collapse. And I'm sure you might be wondering, okay, there's a lot of uncertainty going on in the market. However, markets look like they're moving higher. Yes. Why are markets moving higher? Markets tend to be 6 to 8 months ahead of economic reality. So as these shifts are coming in and these problems are coming in, what markets are pricing in now is the response to some of these crises. And the response markets are pricing in is now a cut in interest rates. If you've been looking at the dollar, it's been sliding lower for the last 2 weeks. It's not been showing any strength. So now I'll come back here to asset prices. So if you look at the dollar, it's been moving lower. I'll share with you the analysis there. But that's what is going on in a nutshell. So tomorrow, what you're trying to piece together, what you're trying to really understand is the trade-off that the Feds have to do. Will they decide to go for higher interest rates at the cost of bringing pain to people, sending the economy to a recession, and taking very many people out of jobs for the sake of bringing down inflation? Or will they be forced by the markets and the market conditions, the financial conditions that are across the world? Will they be forced to lower their rates and stop hiking? Markets are betting that they'll be forced to lower their rates and stop hiking. And why I'm saying markets and not Ken, not anyone else, is because I'm looking at the behavior of price action across different assets. In such an environment, if markets are pricing in more risks and bad things to happen, would have markets trading lower, and they could start trading lower. I'm not saying that they will not trade lower. In fact, I'll share with you if and then statements. If they do this, I think this will happen. If they do this, I think this will happen. If they don't do this, this will happen. I think you really need to have those scenarios in your head, especially if you've been trading for so long. If you look at a market like gold, after the Silicon Valley Bank collapse, gold ticked higher from about 1800. Now we tapped at around 2000 and we came back a little bit softer now. It's down about 2% for today, trading at 1940. However, there's a very, very high chance that markets could either come back up completely, or we could see a collapse again and back to the mean, because markets tend to price in new things as information is coming in. So to just look at markets from a technical perspective, which is what I'll do first, I'll look at 6-7 markets, including cryptos, because what has been happening has been sending people warnings that cryptos are quite safe, unlike the banks. If you look at Bitcoin coming from about 15 to trade at 30,000, means there's an influx of buying as banks are collapsing. People tend to bet on cryptos. But personally, I don't really believe there's a very, very significant bull run there. I've seen very many people try to point out to a significant bull run, but personally, I just don't see that very, very big bull run. But probably 1, 2, 3 moves here and there will happen, but that big move, I don't see it. So before I go to cryptos, let me just look at gold. Gold is a commodity, so I look at gold. Probably I'll even look at oil a bit. I've not been very proactive on oil, but I'll also share with you the current oil prices and what they mean for the economy and what they mean for the current financial conditions. Anyway, the first market I'll look at is gold. So if I just go to the weekly chart on gold, which is where I normally like starting my analysis, you'll discover that gold had this environment that you're trading in. If you're a technical trader, you'll know that this environment is a very, very fishy one. Okay, I don't know if fishy is the word, but it's a very, very difficult one to trade. Why? Because your technicals could be setting up for a very, very good trade, but one fundamental release could change the whole picture, and you could be looking at a totally different scenario as markets are adjusting into the new information. For example, like this week you could have your technicals lining up perfectly, but tomorrow's decision and what the Feds will say could negate everything that you had planned technically, and you could be having a totally different scenario. So you must also be very keen as you're trading some of these environments. how will you look at the information that is currently coming into the market? For example, if you look at this market, there was a very, very beautiful channel formation, which is suggesting a long-term collapse on gold. You can see we're coming in at 1950. I remember this trade quite clearly in January, around February when it started. We saw a collapse from around 1962, which was the top of the year, coming back down all the way to about 1900. 1800, I mean, when rejected 1800, started moving higher. As you are coming higher, you can see now we've gotten a move all the way to 2000. First of all, breaking this channel formation. So you can no longer say we're in a long-term downtrend. So you can no longer say that we're in a long-term downtrend. In fact, on the flip side, we could just be in the beginning of a bull market. If the problems that are going on keep on going on, I think gold is actually a very, very good safe haven. If you look at gold reserves, if you look at something called the gold standard, the gold standard is basically where central banks are forced to hold gold for every currency that they're printing. If you ever go back to such a system, gold becomes very, very valuable. Anytime we have tectonic shifts in the market or in the banking system, even the banks themselves will tend to believe in holding gold more than even dollar reserves. And you can see gold really moving higher, ticking high over the last week. Actually, last week was the highest in momentum. We saw a move to about 2000, but you can see this week we've rejected 2000 and they've started moving significantly lower again. So if I just come back to the daily chart to just look at what is happening from a short-term basis, so you can see we had this initial bull move, collapse to the downside, and then now this move that took us all the way to 2000. We topped at 2000, had a good short signal yesterday. You can see momentum is coming down today. So where am I looking for these markets long-term? I'm very, very patient to see what will happen, first of all, tomorrow. I've not really formed a long-term bias on this one. I think I'm really waiting to see what will happen tomorrow and probably over the next few weeks before concluding March. However, I must keep trading because I don't trade my opinion personally. I just trade specific patterns which keep on repeating. And for now, I can't see that pattern in the market. I was looking for this short-term move from 2000 to around 1950. But you can see 1950 has been taken out by some significant margin. Now we're at 1941, probably 1937. If we manage to close below 1950, I think ultimately we could come back significantly lower again, 1925, 1900. Because again, it trades at 5%, gold shouldn't be trading this high. The only reason gold is trading this high is due to the risks that are contained in the market. But 5% trades are not calling for gold to be trading where it was trading while rates were at zero. Because gold was trading at it topped at around 2067 at the height of the COVID pandemic. Let me just show you this chart on the weekly. At the height of the COVID pandemic, when the Feds were printing over $6 trillion, gold was at 2067. So you can see this move. So the top of gold around 2067. Sometime last year, we retested it in February 2022. We retested it again, then came back lower. This is the third time now. So it looks like we're actually trapped on the top ranges in this market. Not much of a very, very strong trend, clearly. If you zoom in, even on the monthly chart, you'll see clearly that after that strong bull move, which took place between 2018 and 2020, so from around here, when we had this strong bull move between 2018 September to 2020, from 2020 all the way to now, we've been sort of moving sideways, some sort of like some of these movements that we saw before this move. So I'm really keen also to see where the trend will be. Is it to the upside or to the downside? But you really have to wait for markets to give you more information. And I think that is what we're trying to piece together tomorrow to see what will happen. Again, watch for the monthly closes. You can see quite clearly, if you look at it from a monthly perspective, still not created any new high. So this could just be another lower high before we come back and create lower lows. But that's something that you can only know with time. As markets start developing, you can always know that the trend is not to the downside or the trend is to the upside. You just have to have strong indicators which tell you when to pivot, why to pivot, and how to pivot. You must really know when to change those things. So if you go down to the lower time frames on the 4-hour, this week I think the best trade for this move would have been this mean reversion trade. There's one of my partners who normally looks for such moves. A mean reversion trade, so you're looking for the markets after such an explosive move to the upside, you're looking for markets to come back to fair value. A very, very good trade also. And you can see from 2000 where we topped, we've seen a straight decline now to around 1941. The question now is, will we close below 1950. If we do, I think we'll see 1925, probably 1900. If we come back above 1950, I'd be looking for 2025. I tend to belong to the camp of looking for 2025. Why? Because I believe a market which has created a new high is likely to create further highs, while a market which has created a new low is likely to create further lows. So I really like being in the direction of momentum, and that's what I'm looking for here. I think momentum for now is to the upside, but it could turn and turn all around. So let's see if 1950 holds, 1925. If none of those two levels hold, I think it's time to probably look for some short-term short positions. But I think tomorrow's decision is very, very critical. After tomorrow, 9:30, I think you'll be able to know how to position yourself in this market. So the next market that I'll look at is the Dow. The Dow, these are 30 of the strongest American companies, the likes of Microsoft, Google. Those strong companies are in the Dow, so you can check them out. Stocks have been moving lower now for the last about 2 years, since 2022, when you had the top. Stocks have been moving quite lower. So last year was a drop. You can see January was the top, 37,000, and then we saw a straight collapse. We saw some pullback as the year was coming to an end, and I was looking honestly for another collapse back to around 26, 25,000. Just like I'm saying, for me the financial conditions call for stocks to be trading significantly lower. However, markets have remained quite strong. Despite all these things, you can see that markets have not really moved that much lower. And if you come back down now to these lower time frames, probably the weekly time frame, you'll discover that we had bounce 1, bounce 2, bounce 3. We had then sort of like a reversal, and now we're trading somewhere around the fair value area. So 32,000, 33,000, 34,000, 32, 34,000. That's where we've traded, I think, generally for the whole of 2023. So since the year started, these markets have not done much to trend in either direction. I think we're really trying to see if Q2, we're now coming into the end of Q1. So we're trying to see in Q2 if we'll have any trends developing. And if we'll have trends developing, to which direction, how fast will the trends be, what will be the catalyst? Those are the things that I think everyone now, as you're trading, you're trying to look for. So like for me, I'm still somehow short on these markets. I think we need to price in lower moves. I think stocks should need to be somehow lower. Over the last few weeks, I was looking for this short position. You can see markets came significantly lower from 34 to trade at 32. Then we rejected 32. It looks like the bulls have it now. They're trying to push markets quite higher. The question is, will we break 32.5, 33? Will we break these levels and come back higher completely? Or will it bounce off these levels and come back all the way to 31,000? Still, I think tomorrow's decision is very critical. In the 4-hour time frame, this week I had a small short-term position on the upside. So I was looking for this move from about 31,750 to 32.5. Came in very well, made some money here, got out. Now I'm very keen to see what will happen here. 32,750, 32,800 tomorrow. If markets will trade somewhere around here, if we get a good short signal, depending on now what the Fed say. So now these are the if and then statements. I like calling them that. For me, I think if the Feds decide to go with 25 basis points and signal a dovish tone, then I think these markets will rally. We'll have an explosive move to the upside. However, if they signal that they'll continue hiking rates, regardless of what is happening, then I think we'll see bounces here and moves to the downside. So those are the two scenarios that I'm currently watching, depending on what they say. If they say we think we need to keep fighting inflation, we don't care so much about the pain. If they go the Volcker style, there's someone called Paul Volcker, who was the head of the Federal Reserve in the 1980s. He took interest rates from very low to almost close to 10-12%, I think, to combat inflation. He had to fight a lot of people for him to do that, but it eventually worked. If that is what Powell will do, I think these markets have a long way to the downside. But if Powell goes to the other side and decides not to hike rates and instead pauses following what markets are saying, then I think these markets will ultimately rally to the upside. We could even see sometimes probably retesting the previous highs, but it's all a question of following price. It's not about predicting again. It's about following price and just preparing for different scenarios that are taking place in the market. So the next market that I look at is the Nasdaq. Also, the Nasdaq has been showing significant strength despite what is happening even in the technology sector. Some of these banks, like the Silicon Valley Bank, was fully in the middle of the technology sector. Most companies were relying on the bank. If I go again to the weekly chart, the Nasdaq is still in a long-term bear market trend, but with the chances of a quick reversal. So you can see we've been having a collapse ever since November 2021. Markets have been moving lower. We've not been seeing any new highs. We're currently trading at fair value for this year. So this year, not much has happened for this year, actually. Markets have done pretty much nothing, I'd say, because we're just trading, like for Nasdaq, you're trading between 12 and 13,000. I think the real moves are still yet to come for the year. There are big moves that will come. Such moves, these are the moves where you're trying to make money. Those are the moves you're looking for. And you're looking for catalysts like tomorrow's decision of what is currently going on. So if I go down to the daily chart again, you'll see that the market is sort of it's coming back to form some sort of like new high. We had some very, very strong move from last year, December. You can see this strong move pushing markets back up to around 12.5. Minor correction in the form of a flag. Looks like the trend is continuing to the upside. So it looks like the dollar is going to move lower. The Feds are going to have to put interest rates low, and stocks will eventually rally. That's the playbook that the Nasdaq is showing us. You can see the strength to the upside. Despite what is going on, the strength of the market is telling us that we're likely to keep on moving higher. On the 4-hour time frame, if I just come back down to the 4-hour time frame, you can see quite clearly that markets came in. I was looking for a move back to fair value area for possible buy entries. Never happened. Instead, we rejected 12,500, and we're currently moving higher. So I look for this market probably to tap into 12,900, 13,000 to the upside. If the momentum is to the upside, I think those are the levels I'd be looking for. However, if you get a break to the downside, I'll be looking for 12,250 short-term moves. So those are short-term moves, depending on what really happens tomorrow. So that's my outlook on the Nasdaq. The next market that I'll look at is GBP USD. So the pound is basically GBP against the pound. So now this is a currency. I moved from commodities and indices, so I'm back down now to currencies. What basically we're looking at here is what is happening on the dollar. If you look at it from a weekly perspective, I think is where there's enough clarity on what is happening on these markets. Again, these markets also trying really much to be resilient. We've not seen strong moves to the downside. So you can see clearly for Q1, markets have done pretty much nothing. It's been very, very difficult actually to make money for the last three or 4 months, especially for trend following systems, because you can see clearly there are no trends. These markets have taken a strong pause. We had this move to the upside, then we took this pause. Markets moving sideways, so setups not really coming in along. We're looking now for a move. Probably I'm looking for a move personally back to 1.25. If we break 1.25, 1.275. In the extreme cases, 1.3. I don't see why we wouldn't tap into 1.3. Especially if the dollar keeps getting weaker, I think we could easily tap into 1.3. But that is all dependent on what will happen tomorrow. If rates go lower, the dollar gets weaker. If rates go higher, if a hawkish tone is the thing that will be peddled tomorrow, a stronger dollar. If it's a dovish tone, a weaker dollar. If it's a dovish tone, stronger pound. If it's a hawkish tone, probably lower prices on this market. The daily chart, if you look at it from the perspective, you can see clearly I've mapped out what is happening. So we have sort of a long-term trend to the upside. So you can see we've gotten this first, second, third bounce. You're pointing to a move to the upside. We have this long consolidation. So even if you're long short, a very, very critical level to watch is 1.24, 1.25. The minute you take out that level, I think we could easily rally to the 1.275 level, or the 1.3 level, which is the next upside target. So that's what I look at the pound. From the pound, the next market that I'll look at is Euro Yen. I'll look at the dollar, then I'll open it up for probable questions from you guys. So this is Euro Yen. The Yen is also a bit confused. For some time, we had a strong move on the Yen to the upside, all the way to around 147.5. Whatever since we got to this price, the Yen has been sort of like lost. It's not direction. It doesn't have a strong direction like it did. So you can see clearly we're sort of trapped in this sort of a triangle. We went lower last week to trade at 140, a strong move to the low side. I was looking for probably a move to 135. 140 was very strong. You can see we're back to 142.65. very strong move today on euro yen. So probably if this momentum continues, we could see 145, 147.5, probably 150 again. But if we don't break 145, if we stay below 145, then I think 135 is the price. So it's if and then statement. So I don't have clarity on where all markets are going. It's a very, very normal thing in trading. It's all about probabilities, knowing if this happens, this is likely to happen. So on the short time frame, we had these moves. So we could have taken these beautiful moves from 140. Now we are at 142.5. I think 143.75, 145 makes a lot of sense for a target on this market. Same story to GBP, JPY. So you can see almost the same narrative. The levels are just different. For euro yen, it's 140. For GJ, it's 160. So the levels are almost similar. The moves are almost quite similar. If you can clearly remember my chart, you can see that the moves are quite similar. So sometimes you could even use those currency correlations to know how to position yourself in the markets. It's also a strategy that is very, very common. But the final market that I look at before I open it up for questions is the dollar. So the dollar is king, and the dollar tends to dictate what happens in the currency market and probably even across the world. If you're in the Kenyan system, I'm sure you do know how much the dollars have been rising against the Kenya shilling. The dollar has been strong across the world. So if you look at the dollar, in September of 2022, we had the highest price at 115. But we've been moving significantly lower now. We're back to around 103.28 on the dollar index. This is the dollar compared against the basket of currencies, especially the euro. And you can see currently we are at fair value 103, 102.5. So what am I looking for? On the weekly chart, I think there's a clear path from candlestick formation and how markets are behaving that probably we'll see a move back to 97.5. I think one of the things that the Feds will be forced to do in this environment also is to devalue their currency. You can look at currency devaluations historically. They tend to work during such periods. So if that's what markets are looking for, then I think there's a high chance the dollar will keep on moving lower. So those are the insights that I have. The last one that I can look at before I open it up for questions on the last 5 minutes is what is happening on the 10-year and the 2-year yield. So the 10-year and the 2-year yield basically tells us the difference between short-term and long-term rates in the US. So this is the US government's 10-year yield. So this tells you if you buy a 10-year bond, what it's expected to yield at least right now. So currently markets are trading at 3.587. You can see the top that we had was about 4.2. We've been coming back lower. So that means that markets are now pricing in rate cuts, not rate hikes. When you had rate hikes, you can see the 10-year yield was rising in very strongly. Now that you're pricing in rate cuts, you can see the moves to the downside. But if you look at short-term rates, we had wild moves up and down. So we had one wild move to the 5% target, this level. And then in less than 3 days, 4 days, we came back from 5% to trade as low as 3.5. That tells you that markets are looking for 5% rates, but they're betting that the Feds will be forced to keep rates significantly lower. So we're betting on this being the last hike. They take a pause and probably they start cutting rates immediately because of what is happening across the world. So those are the things that are going on now in markets. Tomorrow's decision will play a critical role in how we position ourselves. I will open it up now for any questions that you guys may have, if you have any question.